Hey guys, this is Patson from FOREX in South Africa. So in this video I'm going to quickly show you on how you can actually get to interpret this thing that you're seeing over here, which we call a chart, and also on how you can actually open up trades, how you can close trades, and also on how you can use what we call lot sizes. Okay, so I'm just going to quickly show you in detail on how you can actually get to make everything work together. So the first thing that you need to do is you need to understand this thing that you're seeing over here. This is what we call a Japanese candlestick chart. What that means is these things that you're seeing over here, I've actually zoomed it, these are what we call Japanese candlesticks. Why are they called candlesticks? It's because of the shape, how they look like candlesticks. So they comprise of what we call a body over here and a tail. So the tail is this small thing that you can see which will be attached to the body. So what exactly, or what's really the importance of these things that you can actually get to see on the chart? So these things, their importance is that they show us the activity of the price for a particular pair. For example, I'm actually selecting a different type of a pair. In this case, it's called step index. So step index is a synthetic indice pair. So this type of a pair, what it means is these are computer simulations. These are not real currencies. By real currencies, I'm talking about things like Euro, USD, Great British Pound versus USD. So these are computer simulations which actually mimic or which actually simulate real currencies that I've just mentioned. So you don't have to worry about the name. They are all currencies with only minor differences. Like in this case, step index has an equal probability of up or down with a fixed step size of 0.1. Okay, so I'm just going to show you on how you can actually get to interpret the chart. Okay, for now. So these things that you're seeing here, remember I said we call them Japanese candlesticks. So they show us the history of the price or how the rate was moving in the past. Like if you can check over here, you can actually get to see that. Let me try to put something which can actually which we can actually use as a pointer over there. So maybe I can just use this arrow. So if you can see, on 29 April at roughly around 6 p.m. this is where the rate was. So over here you can actually see that it's corresponding. The rate was between 8,230 and 8,236. That is where the rate was. So today, currently, this is where the current rate is. So in short, in Forex, you are simply being paid for correctly predicting the trend direction. What do I mean by that? If you notice the rate, generally, if you can check from here, the rate is moving upward. So if you predict that, I've made my analysis and I've actually seen that in the near future, the rate is most likely going to go up. You then have to place what we call a buy order. You have to place what we call a buy order. If the rate is going down, you place a sell order. So if you say buy in this case, and then the rate goes against you, or it starts going down, and yet you've said buy, that is when you experience a loss. But then if you say buy and then the rate goes upward, that is how you experience a profit. So in short, that is what we call Forex trading. So So I'm just going to quickly execute an order to show you how you can open up trades and also how you can close trades. And also we are also going to be looking into the issue of what we call lot sizes. So in this case, I'm just going to quickly go and say buy over here. Right, so if you can check, I did not adjust this number that you're seeing over here. It can also be adjusted to a bigger number. So in this case, I'm just going to quickly show you. If we go down below on this section where it will be written trade, you can actually get to see that in terms of the profit or the loss, this is how the rate is actually fluctuating. Blue means profit, red means loss. So the reason why I'm actually in a profit over here, it's simply because if you can check over here, the rate is actually above this buy section. That is why I'm in a profit. Okay, so if I then choose to adjust the lot size, so that's where I want you to notice the difference. Now the lot size, we can actually say this is more like a measurement that you use depending on how fast you want your account to move. If you have deposited $10 and then you want your account to reach it to as far as maybe $1,000 within a day, then it means you have to use bigger lot sizes. But the bigger the lot size, the more the profit, and also the more the loss that you can make from there. So I'm just going to quickly adjust this lot size to a bigger lot size. Remember, 1 is bigger than 0.1. Then I say buy. So once I say buy, if I go on this section where it will be written trade, you can actually spot the difference between these two to say if I'm using a bigger lot size, this amount is actually fluctuating at a much faster or at a much bigger pace. If you can check over here, it's now even way above this position that we opened with a small lot size. So in terms of opening up trades, this is how you open trades. So I'm just going to quickly show you on how you can close the trades. So once you've opened up trades, what you do is, depending with if you want to close trades all at once, you can just long press on any pair that you want to close, then you go on bulk operations, then you select close all positions. But then if you want to close just one position, you long press over here, you go on close position, down over here to be written close with profit, then you click over there, you would have closed the trades. Same applies with this one, long press, close position, close with profit. Okay, so as you can see, our trades have actually been closed. So what is now left is to also get to see the history of the trades. So if I go on this history section, that is where I can actually get to see the trades that I would have made today. This is volatility 75, volatility 50, and step index trades. So it will actually give you a detailed report on how much you would have made for the day. So basically, remember, I've told you, for you to be paid in Forex is you need to correctly predict the trend direction. And secondly, if you want to have more money, then it means you also need to adjust that lot size to a bigger lot size, but it also carries a risk. If it comes into a loss, then it means the bigger the loss. Okay, so kindly watch this video. If you've got any further questions, kindly let me know. I'm going to quickly drop down below some of the pairs, synthetic indices pairs, and some of the minimum lot sizes for each and every pair that you can use.